Hey everybody, thank you for joining. This is CryptoVatsik. Nothing of what you're about to see is considered financial advice, and they're just my opinions. If you do enjoy this content, I would really appreciate it if you gave this video a like, and don't forget to subscribe to the channel for future updates. Let's get into it. Okay, in this video, I'm going to be covering the graph GRT. We're going to flip first thing to the 3-month chart. So we're on the 3-month chart here. We're going to mark out this level. This level is established right from this candle close, this big red candle close here. We had a terrible candle here. It actually is green, okay? Tried to push up here with this wick, however, closed right down back at this level again, and then this candle thereafter obviously being the open. So just a bit of an area of interest here that we're gonna mark out. Let's drop back down to the daily now. Okay, so you can see that 3-month level that we've marked out here. We'll just label it. Okay, so right off the bat, this 3-month level you can clearly see was an area of demand for quite some time. This was all the way back from June up until just around October, until of course it was lost and then rejected. I do have a diagonal that someone pointed out to me recently on one of the charts that I shared here. Okay, this is basically a 6-month diagonal trend that we had been respecting here, okay, here, and arguably here, with what is now potentially a breakout, which clearly is good if you're bullish. Right now, at the same time, I'd be very cautious. I'm cautious with diagonals, especially with the macro environment. We're still in a bear market. Oftentimes, when you see a breakout like this, you can definitely see a pop, but then you can most likely see a mean reversion back down to the same trend and then just trading on the inverse side of the trend. So we could potentially still see new lows. So I just trade diagonals cautiously that way. So it's just something to keep in mind. Although yes, if you're bullish, obviously breaking this diagonal after a 6-month downtrend is a good sign. Now currently what we're seeing here, I shared this on my Twitter last night, is that we were coming into an area of supply resistance. So when everyone was seeing this green and getting very, very bullish, I was just warning my followers to be cautious, stay objective, and understand that if you're buying right now, you are buying at resistance. I also had this diagonal that was playing at that point. We had not breached it yet. It looks to be breached at this point. However, you have to be careful with deviations. If we come back down and start trading underneath the diagonal again, this will just be ultimately a deviation. Another way of looking at it is just looking at the daily range that we're working with right now. So we've got basically from this swing high, okay, so off this big move, we made our swing low and we made our swing high on this green candle right here. So we'll mark that out. We got our swing high down to our swing low. For me, this is the range that we've been trading within, and just look at the deviations, right? So we've got a deviation here, deviations here. So for me, this is the range that we're still currently trading within. Ultimately a triple bottom established, but almost getting 2 equal highs at the same time. So just a ranging asset. For me to consider this not a deviation, I'd like to see the retests of this consolidate within a smaller range above the range high for a push up, and ultimately looking again as a target, closely watching that 3-month level that we had marked out. There's a bit of a liquidity gap here within that candle still to be taken up, swing of this high, and then ultimately it's a question of if we are going to come back inside of the previous range that we had. So this range here, previous one that we were trading within, I think if we do have this push up and we can test this 3-month level and get back inside of the range, then all of this just becomes a deviation, and then we're just back inside this macro range. Ultimately, until then, we have to trade still what's in front of us. So let's just drop down to the 12-hour. Okay, so on the 12-hour, we had this area of consolidation. So basically a bit of a power of 3 here. Okay, so 1, 2, 3, deviation above, deviation below, back to the mean. Basically retesting that level here, okay, within blue on this retest right there. That was your trigger to go long. Also a form of a market structure break, but ultimately a reclaim of this consolidation level or zone in blue. It was a significant level even from all the way back here. We had 1, 2, deviate 3 times. So if you're looking to get involved now, I'd be saying, okay, so we're still in some sort of range here. If we're able to push further and break out of it, we've got our targets and we've got the previous range that we can play with if that happens. For now, I'm not looking to do business yet up here. I'm not looking to get involved yet up here. I'd be looking 4-hour chart here at this channel. Okay, we've got this channel that we're working with, ascending channel. So yes, of course, break to the upside, hold the upper band of the range, we go up. Vice versa, break the channel, we come back down, I think, to this breakout level, down to the EQ. Personally, this is an area that I would like to get involved at that breakout level. Maybe a minor liquidity gap still in here. So break the channel, come back down, take liquidity, test that breakout level here, and then back up, trade it to the range high for 12% move. Sure, if we look at RSI, we'll be looking at some sort of bearish divergence at this point, getting a high, higher high in price, lower high on RSI, another higher high on this wick on price, another lower high in RSI. So bearish divergence, prices increasing, higher highs on price, lower highs on RSI. So it could be due for a short-term retracement, as I said. And let's see fibs, take it from the high, assuming this is the high for now, down to the very beginning of the move. Okay, so not to the breakout level, to the first beginning of that overall leg. And where's the 618? Right on that liquidity level that we marked out in green. Okay, so that's pretty much it. That's simple. We're still in this range until proven otherwise. If we break out of it, I'm looking at the higher macro range that we were previously in on the daily. Like I said, if we trade back inside of that range, and range low being here near that 3-month level that we marked out, we trade back inside there, then ultimately on a high time frame, this possibly just being an overall deviation, and then you basically revert back to the mean. What I mean by that is basically you just see it with range trading, right? So basically you make a major swing low, you make a major swing high, revert back to the mean. Go low, revert back to the mean, make a high, revert back to the mean. Low, revert back to the mean, you make a high, revert back to the mean most likely. So from a high time frame perspective, if we're saying that we're coming back to that previous range, okay, which is here, okay, this guy, this being the EQ of the range there, 50th percentile, then essentially we're making a low, okay, and we're reverting back to the mean inside of this high time frame macro range that we had previously. It's possible. I'm saying it's possible. I'm not saying it's necessarily going to happen, because still for now I trade what's in front of me, and what is in front of me is we're still within this range down here. So it's just a question of where you want to get involved personally. You just come up with different points of confluence, different technical analysis, argue against yourself, argue both ways, make sure you can see every reason why you think it will go up and every reason why you think it might come down. Don't just use one indicator and simply trade off that. I had someone tell me, they said, oh, we just broke out of a 6-month downtrend, so it's going to go up. And this is the downtrend they're talking about. Let me redraw it. This is the downtrend they're talking about here. Okay, so they said we broke this downward sloping trend, price is going to come up. Yeah, sure, that's great. We have broken it, but the macro matters in this type of environment, okay? And what I mean by that is that we're still in a bear market, and I can't tell you how many times I've seen in bear markets that you get a 6-12-month downward trend broken, and you have a nice little pop. Sure, you know, you get a little pop off, but then ultimately you sweep previous high, come into supply, it's rejected, and then you'll see price come back down. Again, like I said, revert back to the mean. You made a high, sure, you come back down, and then even possibly continue to follow that trend down, all the while making new lows. I mean, I'm sure I could just find an example. Like, let me just do it right now. Okay, right here, here's one example. Okay, we had a downward trend right here. Breakout, retest, it's up only, right? No, came back down, revert back to that demand zone, new lows. Let's find another. Okay, right here, really technically a trend because we only have 2 taps here, maybe 3 here, or 4 here. Okay, so essentially though, what do we see? We see a breakout, a weak bounce, call it a retest, sure, but ultimately it's just ranging, you guys. There's really nothing else to it. It's the macro environment matters right now more than ever. Let's see if we can see another. Okay, right here. Yeah, sure. So right here, okay, 1, 2, 3, 4 taps. Okay, consolidating, breakout, retest, no reaction, little bit of a pump. Okay, yeah, you could have traded that, but then right back down to the demand zone within the range, and then it's just sideways chop. So I'm not bearish. I just want to caution you that we see this in bear markets often, and you know, though we have broken this diagonal, it's fine. It's one piece of confluence. If you're trading it in the short term, yes, you could wait for a retest and then come back up to that level, like I was saying, and trade that with the expectation that we're at least going to come back down to this demand zone. That's how bottoms typically form over time, is testing demand over and over and over without breaking it, or just with a slight deviation. That's how bottoms typically form. Or again, potentially making new lows on that same trend, or just a complete dump capitulation, and then we start to get our bottom. So it just depends what Bitcoin's going to do, depends what ETH's going to do in the macro environment and all that good stuff. And like GRT, don't get me wrong, I'm bullish on the graph, I am, but I just might have a little bit more patience than some newcomers in the market. You know, I've seen this countless times. The graph was only listed back in December 2020. I've seen this with dinosaur coins. I've made those mistakes years ago. I've been in the game for 6 or 7 years now, and so I'm just trying to caution you of the mistakes that myself and many other traders have made already. So be patient. You can be bullish on something, but just in the short term, still bearish. Okay, it's okay. Don't use absolutes. You know, you got to be flexible. Don't say any price is crazy, because crypto never ceases to amaze me. So yeah, basically we will see what happens over the coming weeks here. You know, time will tell, but we're just currently sideways chop still. So, you know, you trade this range until we break up, and then we just trade the upper macro range here. Simple as that, really. Anyways, guys, thank you so much for joining. I really appreciate you joining today on this video. If you did enjoy this content, please give the video a like. Don't forget to subscribe to the channel. I will be posting as much as I can throughout the bear market and into the bull market. Thanks again. Have a great night, everyone. Cheers.